Well, good morning, dear traders. Winston Gold here, aka Mr. Mayor Forex Trading. Just want to get this volume right. All right. So today I'm just going to be concentrating on a couple of things that I want to talk to you guys about. Of course, the gold is one of them, and then I've got a nice pound trade that I have in this in a good profit. It just recently broke through the recent swing high. It did break through, so I'm waiting for a nice retest. Looks like it's on the way up, especially if we can see where the numbers that should be coming out now at 8 a.m. South African time. So it's now in about 12 minutes time. I'm just looking to see what the retail sales numbers are going to be. This is the month-on-month retail numbers. So for the pound, I'm interested in that because I am in a pound trade. So that is exactly why I'm interested in that. For today, we haven't got any other news. We've got the prelim, the consumer statements, and then inflation expectations. But later on, that's at 4 o'clock this afternoon, South African time. But I'm not too focused on that. I just want to see for next week, so we can start preparing and seeing what is coming up. The Canadian dollar has got the CPI. Okay, but I don't have any Canadian dollars out, so that's for Monday. No, sorry, that's for Tuesday. Wednesday, USD. Okay, okay, so that's the meeting minutes. Usually when that comes out or when that happens, you do see a spike. All right, so I see for Thursday next week. I like trading in the euro, so I do have a couple of euro trades. So this is going to be quite interesting to see all these. It's the PMI, the French PMI, the German PMI. So it's going to be quite big news. And then we've got the flash manufacturing PMI for the pound as well. So next week, all my pounds and the euros, big news next week. And then we've got the flash manufacturing PMI for the US dollar as well, and the unemployment claims. Okay, so next week, Thursday, is going to be a big day in the markets. Yeah, I would suggest if you are a scalper, if you work on the 1 minute, 5 minute, or the 15-minute time frames, next week, Thursday, not to be trading because the markets are going to be spiking left, right, and center with all this news coming out from the euro, the pound, and the USD. So these are the three strongest currencies out there, and these three currencies all have got big news on the same day. So I would suggest next week, Thursday. It's going to be a big day. Of the markets are going to be all over the show. So yeah, that's something to look forward to next week, Thursday, of course. All right, but that's next week's thing. I just want to go up now to the important one, which is today at 8 a.m. In about 9 minutes time, we're going to see the pound, just the retail sales. It's not a big number, it's not a big thing, but we'll have a look and see what is the news on that one. All right, so ladies and gents, coming from the gold side, I just want to jump to the gold quickly. Remember this, I'm on the gold, the 30-minute time frame. Where's all my other things that I usually have on here? Oh, there they are. Hello. What are you doing all the way that side? Okay, there must be another one. Oh, there it is. Alright. I just want to put all these things together so we can see. Alright, so yesterday I didn't put any gold trades in on my real account. I had the one, just this little one over here, the push to the upside on my real account, trading the way I trade with my style. Plus on the demo account, on this demo account, I had that this trading strategy that I'm working on at the moment. I had this one on yesterday. Also, I picked up this trade. And believe it or not, I won this trade. Can you believe it? I can't even freaking believe it. But anyways, yeah, so I did take this trade on my real account. This little up movement over here, it was a nice profit. When the spike came to the downside, my take profit was under there. My take profit got taken yesterday. So where did I jump into the market? I jumped into the market over there with that second run, the second breakthrough there. Yeah, so I jumped into the market there. So I had a nice up momentum, a short trade. Not a selling trade, but it was not a very long. It wasn't in the market. I wasn't in the market for a long time because I got taken out there for a profit. So on this demo account, I put a trade in here yesterday as well. You can go back to the video yesterday. I trade live, so there's no bullshit. There's nothing. I don't only post winning trades. A lot of these traders online. That's why I decided to start my YouTube channel in the first place, is to show traders, or to try and motivate, especially new traders, to trade the right way and not believe on a lot of these so-called traders online that only posts and make videos of the winning trades. You will never see them trade live, and you will never see them post any of their losing trades. Real traders trade live. They won't be fearful of trading live. Alright, so I do know that there's a handful of traders online on YouTube that does live trading. If you want expert advice, or you want some mentorship, follow those guys. Look at what they're doing. Don't follow these people that only post winning trades and make videos of buy this course and buy that course and join this Discord and pay that and pay that. They're not there for trading. They don't make money with trading. They make money with fooling and bluffing you, the potential profitable trader. Alright, there's a reason I started this YouTube channel, and there's a reason I'm doing what I'm doing on my live account. So yes, this is a demo account because I'm testing out this trading strategy, and I want to motivate new traders to start trading on a demo account first. Take 6 months of your time, 6 months before you even start jumping onto a real account and using your real money. Take at least 6 months, a minimum of 6 months, and trade on a demo account first. Find your rift, find your groove, find your style, find your confidence when you are trading, and do that on a demo account. Because believe you me, so many people come on, they start trading, they trade on a demo account for a month, and they think they can make it. Oh yeah, it looks like I've got the basics down, I'll learn as I go. Then they start trading on their real account. Then the problem starts, because once you start using your real money you've worked for hard, the fear factor goes 100 times higher. Then you make mistakes by putting short stops and over leverage. People try and get rich overnight with trading. Then you're not a trader, you are a gambler. There's a difference between a trader and a gambler. A trader has got builds systematic wealth. Slowly but surely, that's how you build wealth. You only want to risk a maximum of 1% of your account. If you can, only risk 0.5% of your account. Make that your risk, 0.5%. Okay? Don't over leverage, don't over volume, don't put too much, don't go over, don't try and make R1 million overnight. You're not going to make it. Go to a casino, you'll have better luck there. Alright, so that's my little rant for the day. We've got 4 minutes left to all the news. And after the news, I'll come back to this gold and explain to you what happened yesterday, because this is quite a weird one, what happened yesterday. This trading style that I use here, that I'm busy testing out and busy working on, goes against basically everything that I've been doing. And I've been trading for years now, and this trading style goes against everything that I've been doing. So when I put this trading on the demo, I didn't do this on my real account because I'm still testing this Fibonacci strategy, and I will explain it to you guys now in a couple of minutes, and explain why it goes against everything I know of trading, or goes against the way I've been trading for years now. But anyways, I'll also do trade live every morning, South African time, 8 o'clock in the morning. I start Monday to Friday. I trade on live with no bullshit. So if I make mistakes, it's on live. And I want you guys to please share this video, share this YouTube channel. Let's start building a big YouTube community of real traders real traders, not traders that just post these lame ass winning trades that they won by luck or by chance and then try and sell you shit. You know, if you are such a good profitable trader, why do you need to sell shit? That's how they buy all those Lamborghinis and Porsches and big houses, is by fooling people and scamming potential new traders. And that's why I started my YouTube channel, because I can't take that anymore. I cannot take that anymore. My channel is free. I don't have a Discord. I don't have a Telegram. I don't have nothing. I'm not going to sell you anything. I never will sell you anything, like any course or anything like that. Nothing like that. Trading is for everyone. That's why I do this. And that's why I give my advice. And remember, ladies and gents, it is just advice. It's not a given. It's not to say that I'm right every time, because trading, trading is a guessing game. It is it's not a given. But along with money management, you will become a profitable trader. You will. If you manage your trades correctly, trade small lots, don't over leverage, and focus and just do it the right way, you will become a profitable trader. Yes, you might start off and make $2 here, $3 there, $5 here. But at the end of the year or the end of the month, all that adds up to your main account. The bigger your account grows, the bigger your money grows. So the faster you grow. That's the thing about trading is, if you start with $1,000 account, let's say you systematically build 1% on that account a month. Only 1%, that's $100. So at the end of the year, you will have an account of $2,200. So at the end of that year, you take your $2,200. Now you can start trading and upping your leverage a little bit, or your volume a little bit, upping your risk. So you only risk 1% or 0.5% of that $2,200. So if you, and this is now realistically, this is the average that people build on the accounts, is 1% a month. That's the average. Don't go and believe that people build 10% a month on their accounts and 20% a month on the accounts. That is not. It's not. No one has done that. No one has done that. You see, no one. So you build 1%. You try and build 1% a month on your account. So now at the end of year 2, your 2,200. So let's say 1% of 2,200 is $220 a month. So now you're starting to make good money. You see, so at the end of 5 years, you will sit with a $10,000 trading account, and that's where you want to be. If you can get to a $10,000 trading account and make 1% of that a month, only 1%. Wait, I did that the wrong way around now. Anyways, you guys see what I mean, because I'm looking at the time now and I'm trying to rush through this. All right, I just want to have a look at this number quickly. This the retail sales number. It's not going to make a lot of movement. It's not going to be a big number, but I just want to see on my pound USD. That's where I want to go to, and let's have a look quickly at this numbers that will come out now soon. I just want to restart this. Got 30 seconds left. I just want to restart this forest factory. Okay, so we got yeah, I think about 10 seconds left on this one. Don't know why they don't put the thing there. Usually they put that thing there like, okay, 1 minute, 60 seconds, 30 seconds. Looks like only the USD is important enough for that. Alright, so there we go. We got some movement over there. Come, give me the numbers now, man. Ooh, okay, so there's the new numbers. Eesh. It's a 0.1% lower than expected, than forecasted. Okay, so the previous was 0.9%. So if you can see, the retail sales is going lower, which means people aren't buying, people aren't spending anymore. People are spending less, which means if you look at the stock market or look at the economy, it means that the economy is actually shrinking a little bit. But that usually happens here in the middle of the year, or let's say this time of the year it happens. You will see closer to December or closer to holidays, this will definitely change, especially if you look at the pound. You know, the UK is a very nice holiday destination, so you know, then you will see a change in that number. It grows. You have to know retail sales goes up and down as the year goes. Certain times of the year sales are low. It is because it's not holiday, it's nothing special is happening. But come holidays, or you know, especially Christmas or whatever, then you'll see this number go up again. But that's just retail sales, so that's just, it's not a big train smash, and it's also not a very big drop than the forecasted. You see it's a 0.1% lower than forecasted. So okay, that's good to know. Well, this pound USD that I'm in is already $85. Well, my profit here is $22. I'm waiting for this one to break through and make a new higher high. I'm just waiting for this higher high to form, and then I'll move my stop to there. I can actually do that actually. I'll just go to my main account, to my real account quickly, and also just do the same. Yeah, that's what I'm doing here. I'm doing exactly the same on my main account as well. Give me 2 seconds. Let me just also do that quickly. I just want to see what's the number there. I have to move it up to that number. So my phone, I don't have the, you know, this whole chart open. I've just got the numbers, so I just want to see the numbers quickly. Okay, I'm gonna move my pound USD. I want to move up to 1.27944. Come on, go you know. Give me 2 seconds. I just want to just up my stop loss on my real account quickly as well. What's that? 1.279 44. 1.27944. Yes, okay. All right, fantastic. All right, updated there. That's cool. Thank you. All right, so let's just quickly go and have a look at that gold. I want to explain this what happened yesterday. So I have explained my trading style, or my trading method that I use. There's two main methods that I use. I look for gaps in the market like this. This is a good example. I look for gaps. You see where there's no candles. It's fair value. It's basically a fair value gap, or a buy gap or a sell gap. So usually what this shows me is that big traders, institutional traders, have jumped in there. That's why markets just shot up to the upside. So that's what that shows me. Whenever I see gaps like this, I do consider this as a solid support, or if it's a gap to the downside, I see it as a solid resistance. So this was a gap to the upside, to the bullish side, which means this to me is a solid support. I make a box around it and I keep that green box there, or if it was to the downside, I keep the red box there. So whenever price does come back into this zone, I usually put a buy order in, or whatever, because I know, and it's not a certain, just remember whatever I say here, it's not for certain, but the majority of the times price does go in the zone, jumps to the upside, and then shoots up, because I know there's a lot of buyers here, and these buyers do not want the price to go below there. It can, if the bears overpower the bulls, it can break through. Nothing is a certain, but that's why you have money management, and you don't over leverage, and you don't put too much volume on it. So I did put a buy order in when I saw on this one, when I saw price come up, I see this nice wick, I did put a buy in. Now this is a premature buy. This is a buy you do when there's no confidence. There's nothing telling you that the trade or it's changed to the upside. The trend has changed to the upside. No, this is just a how can I say it? A educated guess. I do that sometimes. It's maybe not the correct way of trading, but I've used it now for years, and this this has paid out quite a significant amount. So I jumped into the trade there, and price did go in my favor, luckily, and it's still going up in favor. And as you can see, I am $44 in profit. This is on the demo account. So here I am in profit, because this is my stop loss here. I'm just doing a trailing stop. So I have $44 in my bag. If a new higher low forms, how do you know it's a sustainable low? Is once you see a low form and price breaks the previous high, the high from that low, then you know that is your new swing low. So I'm waiting for the same to happen. I'm waiting for this to just keep on continuing, making a turn back, and then continuing on and breaking this high wherever this high forms. Then I will move my stop loss to the upside. I do have a stop loss there as well. This is my expectations. This is I'm expecting price to get there, but it is still not a given. Okay, this is where I'm expecting it to go, but I still do a trailing stop as I go along. In case it doesn't get there, at least I get out of the market early, and I can start looking for some selling opportunities according to my trading style, by break of structure style that I use. I've done videos on it where I've explained it thoroughly. So please, ladies and gents, also, if you do have any requests, anything you want me to have a look at, feel free to put it in the comment section, and I will gladly go and have a look at it live on YouTube. Live, I will do some research on it, and I'll look at the market structure, and I will give you my advice on whatever you want me to have a look at. Okay, so let's see. I just want to see if the on the comment section there, if there's people on today, because I know South African people are working, but luckily for me, I am a full-time musician, so I basically work weekends, Friday nights, Saturdays and Sundays, and then some Wednesdays I do work as well. But I'm a musician, so during the day I'm free to basically do whatever I want to do and be wherever I want to be. So that's why I do trading as well, and I've been doing it for years now, and it keeps me busy, it keeps me occupied, and it keeps me busy. And there we go. Alright, so I can see the comments now as well. So if you have any comments, even after the posting of this live video, please post your comments on the comment section, anything you want me to have a look at. And with my next live video, which will probably be Monday morning, I will definitely go and have a look at whatever you want me to have a look at and give you my thought on it. Alright, so getting to the gold. This is a strategy that I've been working on now for about a month, basically, that I've been looking at. I've done some back testing on this strategy because I want to add this, or fine-tune this, to add this to my arsenal of trading styles, because the way I trade now with my breakout structure or fair value gaps, my gaps in the market, I don't necessarily trade when prices does these spiky things. You know, when you see a rapid down movement or a rapid up movement, I don't trade, I stay out of the market. But I'm looking for something, I was looking for something that would help me to trade this kind of market as well, be choppy markets as well. And I've been messing around a little bit with the Fibonacci tool, and I found a pattern that that really works, and I was testing it out and looking at it for a while, and this is how far I've been fine-tuning it. Let me explain to you what I have pertaining to this trading method. I won't necessarily call it a strategy, but it's a method. Whenever I see a rapid movement, you know, like this choppy waters over here, when I see like, damn, this is just a massive sell-off, whenever I see a big move like this, at the end of that move, once I see price start moving to the upside and continue moving to the upside, I see, all right, it's continue going towards the opposite side. So if it's a buy or sell, I don't care, but I'm just going to explain now this way. Once I see price start moving to the upside, I take my Fibonacci and I put it on the top of that wick to the bottom of that move, right over there. And while price is here, I put a sell order because I'm looking for it to sell, because we've got sellers in the market, so I'm looking to sell. Right on the 50% retracement, I put a sell order, a pre-order in, right over there. I put a pre-order right over there on the 50% retracement mark, which is, I'm just going to put this a bit above it so you guys can see it. So I put my trading, my pre-order on the 50% mark, and I put my stop loss, there's it, and I put my stop loss between the 75 and the 100. If you have, you know, if you're trading with wide stops like me, I would put my stop above the 100, just above the 100. That's where I usually put my stops. I like trading with wide stops because I don't trade with, you know, over leverage or big volumes and so forth. My lot sizes and stuff is very small, so that I can have very wide stops. Anyway, so what the idea is behind this trading strategy is that price will come up, because majority of the times when you see big abnormal movements, price does come up to fill that gap, because now it's left a void in the market there. So there's a lot of selling money, there's a lot of money there in that move, and the market needs that money. So what usually happens is, majority of the time, I've seen that price does come up and fill this gap and just come to the middle of it. So that's why I've got on the 50% retracement, I've got the sell order in and my stop loss either between the 175 or above it. And then as price comes there, what happened yesterday is it picked me up there, and then I've got a TP1 on the 25 and a take profit 2 on the 0. So basically what I'm doing is I'm putting my TP1 and TP2 in there. I just had a take profit right on that one there. So price came up, and really it worked out yesterday, and it's weird that it worked out. It's very, very weird that it worked out, but anyways, because that's not the way that I trade. So now we see spiky again, and you can look at this from this point of view as well. Let's look at this, this spike as well, all the way from there to there. I'm going to go closer now so you guys can see it. Let's just pull it up. So as you can see from this point of view as well, where's this spiky? I just want to reverse a little bit. Okay, so as you can see now, so I put the fib on this one because this is also an abnormal movement, a real down movement. So what I would have done is put I didn't jump in because this happened last night. I was sleeping. I sleep at night. So I would have put my entry there, my selling order in there, my stop loss I would have put just above the 100 over there, or between the 75, but I usually put it above the 100 because I work with wide stops. But according to this trading method, you can put it between the 75 and the 100 as well, if you want to have a bit of a tighter stop. And then now supposedly that price will come down because you've got now your TP1 there and your TP2 there. That's according to this trading method. Whenever you see like a spike, like a big spike, that's how you trade these choppy markets. But I haven't perfected this strategy yet. I'm doing it live, so if you have any ideas, maybe some rules or something we can add to this to make it a bit more better, to have some confluence and not just put a Fibonacci, put a trade in and hope for the best, because that's usually not the way I trade. But anyways, it worked out yesterday fine for this trade. But let's see, like now let's see today. If I had put my pre-order in there, I would have been in the red by now already. But okay, let's see. Let's work on how my trading strategy worked. I want to show you the trade I picked up yesterday on my live account. Just want to show you. Just want to see there quickly. Okay, I just want to show you the trade I took yesterday on my live account. Working on this method of trading here. Let me just also move that thing correctly there. Alright, so yesterday what happened is, usually if I see big movements like this one here, you see, that's why I didn't, and also this happened last night, but I wouldn't have put a trade in with such choppy, such big moves. You know, I don't like trading. Once the market comes back to normal again, then I'll look for trading opportunities. So what happened yesterday is I saw like there's an up movement, but it's not, you know, it's not like that, like big wicks and just, you know, just very violent movements. So now I know, okay, markets are back to normal. So what I'm looking for is, I want to see where the recent swing high is, and there's the recent swing high over there. Came back. That recent swing high was broken. The next candle came right back into it. So that is not my swing high. That doesn't count as a swing high. Markets came back. This is still my swing high here. That is not your swing high. You don't work on that one because it broke through, but it came right back down into the market again. So that is just like a little fake out. Okay, so you don't trade that. So I didn't look at that. There I saw with the next candle over there, I saw it broke the previous swing high. It broke it, came back for a retest. That retest didn't go back into that zone, and it did a second run. These doji or these candles here, I counted as a green candle. Okay, so there's your second run. Usually what I wait for is I wait for a candle to break and stay above the recent swing high, come back for a retest. The retest must not go back below that recent swing high, and there must be a second run. There is the second run right over there. Once I saw the second run, because let's now I mark out. Once I see, okay, it broke it and came back retest and didn't come back in here, and I see prices going up, I mark this recent swing high, which is the candle that broke the recent swing high or the previous swing high over there. That's that one over there. So then I mark that as the tippity top of it. This is now my new line. So here's the second run. The second run broke that candle that broke the previous swing high. If it makes sense, I know sometimes I don't make sense, but just let me know. So it broke there. So now I know this is my second run. It's confirmed the second run. Now usually I put a buy order in there. While the market is there, I put a buy order in there as well. And I did put a buy order in there yesterday. Markets came back, picked me up and put me in the market. Now I'm in the market. My stop loss was below. I like putting wide stops. Like I say, I love wide stops. So my stop loss was there, but now I'm in the market. That candle over there put me in the market. Came up, whoop, and there's the swing high because it broke the previous swing high. So there's the new swing high over there. Right over there is the new swing high. Low, broke it there. That swing high is broken, so that means this is the new swing low. So I moved my stop loss to trading stop right up to there. Now I'm in profit. I was in profit there. Broke, came back for a retest, broke. There, this candle over here broke the previous high. So this is now my new swing high, and this is now my new swing low. So I moved my trailing stop to there, just below this one. Price came up, price came down, broke. So now I see there's an upward momentum. So this previous swing high was broken. I'm waiting for the new high to form, but I don't have to wait for that high to form. Now I know this is the previous swing high, so this is then the previous swing low. And I moved my stop loss, my trailing stop, to the very bottom of that candle. Price came right back down, took me out the market. That's why I say it wasn't a big gain on my account. It wasn't a big win, but every little bit helps. A win is still a win. So now what happened here is now I know where my previous swing low is, and then markets came down and I saw this big candle like going right down, and going right down to there, going right back up. And then I decided I'm not going to put any more trades in on my live account until gold, starts stabilizing again. I want gold to be normal, then I'll start trading again. Then I'll start looking for the recent swing lows and swing highs, which it looks like gold has calmed down now, and it's back to normal. So now what I will do is I will look for my previous swing highs and swing lows. So I can see this is the recent swing high. Reason it is because the low broke that swing low. So there's my swing high and there's my recent swing low. So now what I'm waiting for is for this high to be broken, retest, and a second run. Then on the high of the candle that broke the previous high, that broke that high, I will put a buy order in if we're going to the upside. The same with the downside. If price decides to come right back down now, because you see you're in a ranging market now. If price decides to break the previous low, I'm going to wait for a break, retest. That retest must not go back into that zone. And then I'm looking for a second run that will pass that swing low that broke the previous swing low, basically. And then on that previous swing low that broke the previous swing low, even yeah, I know it doesn't make sense, but there I will put my sell order in. All right, so for now, that's the way I trade and the way I like to trade. Choppy waters, and that's why I'm just looking for something that will, you know, also help me fill these choppy times when prices are just when price just spikes. Okay, but going off this new trading strategy that I'm busy trying at the moment, yeah, it's if I did it here with this spike, I would have been in quite a significant amount of trouble over here, because now, number one, I'm in the negative. Number two, I'm stuck in a ranging market. So I don't want to get stuck in ranging markets. That's why the way I trade keeps me out of ranging markets. You know, with the breakout structure and the second run, always trade on the second run. So you avoid fake outs and you avoid being stuck in ranging markets. Anyways, that's the way I trade. I just wanted to share with you guys. I do have a Euro USD trading as well on my real account. I jumped in on the break of this previous high, this candle that broke there, and switched to the next one. It came back for a retest. I jumped in there for a buy. I do have a buy open, and the reason that I've got a buy open is, number one, we see a lot of upward momentum in the market. You know, the market is busy to the upside. And number two is, if you go to the daily quickly, I just want to go right to the daily. Sometimes when you're stuck in the market and you don't know what direction you think the market's going to go at, reverse out to the daily and get a fresh view of the landscape, get a fresh view of what's happening. So if you can see on the daily, we do have this nice wedge pattern going here, and it broke out of that wedge pattern there. So now I know I'm looking for a buying opportunity. Unless this was just a little fake out, then of course I'm going to be out the market, because I didn't wait for my break and my second run. You do the same with this as well. When you do see you know, the price is breaking a structure, you wait for a retest, but the retest must not go back into the structure like it did here. You see, then this doesn't count. Then you'll just wait for a second break, retest, and you'll wait for your second run. If your second run passes the high that broke the initial structure, then the same process follows. You'll put a buy order in there and whatever. I jumped the gun here a little bit, because I'm looking at the markets and I'm looking at the news and I'm looking at the wealth of the economy of these currencies, and that's why I jumped in there, but I probably shouldn't have. But that's trading. You know, sometimes I do things that is a bit risky, but because I work with small lots and, you know, small volumes, even if I lose this trade, I'm not going to cry about it, because it's not going to make a difference on my account, you know, on my trading account. So that's the freedom that you get when you trade small lots and you only risk like 0.5% of your account, maximum 0.5% of your account. Then you've got freedom to explore. You've got freedom to move, and you can trade with a clear conscience. You don't have that fear factor in your mind or in your heart where you like doubtful or doubting yourself or second guessing yourself. And it just makes trading so much more fun, and you build systematic wealth. I'm not gonna keep you guys for too late or too long. I will be back on Monday morning if something happens during the day, something interesting happens during the day. But usually Fridays are quiet days in the market. I will go live, and I will put it up there. Everything I do live. I don't make a video or whatever. I trade live. So if you want to join me for my live tradings, Mondays to Fridays, 8 a.m. South African time in the mornings, please share this video. Please subscribe to the channel. Let's help grow this channel, and let's try and see if we can save new traders and save them from being scammed by these so-called traders. Some, I don't say all of them, there's a handful of traders that are good traders, but majority of the traders online that post these winning videos and drive these flashy cars and whatever are just scamming you and selling you packages and selling you courses. They're just fucking scamming you. Don't listen to them. Don't even give your time of day to them. If you want to meet a real trader or follow a real trader, follow someone that trades live every day, Monday to Friday, live. That is a trader that you can follow, and that's the mentor you should look after. And that's why I've got this YouTube channel, and I need you guys to help me grow this channel. Comment down below, share the channel, and just post it wherever you can on your socials, so we can get people to start joining and build a community of real traders that are there to trade and make money. For my side, Winston Gold EUR USD, Mr. Mayor Forex Trading. Please have a good day and have a safe weekend and enjoy it. Cheers.